Stocks closed mixed on Wall Street after CPI inflation for November meets estimates. The Nasdaq hits a record high, closing above the mark of 20,000 on optimism over potential rate cuts. The S&P 500 also rallies while the Dow underperformance continues, closing with losses. Stocks in the Asia-Pacific have opened largely higher following a mixed handover from Wall Street. The GIFT Nifty is also suggesting a start with a positive bias for our own markets. Crude prices rise after the European Union agrees to additional sanctions on Russian oil, taking Brent to above $73 a barrel. Gold prices also inch higher as US inflation data fuels optimism over rate cuts by the Federal Reserve. India's CPI inflation data for the month of November will be released later this evening. A CNBC-TV18 poll sees inflation at 5.5%, below the MPC mandate of 6%, but food prices are still high. Our poll also sees the industrial production for October coming in at 3.5% compared to 3.1% in September. And the proposed GST rate changes receive a lukewarm response as state governments remain wary. Sources say that some states are likely to argue for a pickup in consumption before tweaking taxes. However, there is likely to be consensus on rationalizing tax rates on health and life insurance. That is an exclusive. Good morning. You're watching Power Breakfast here on CNBC TV18 this Thursday morning in the Mumbai News Center. I'm Hormas Fatakia. Let's first take a look at how the Asian markets are faring this morning. And it's a largely positive start considering the fact that most of the markets on Wall Street were on the positive side last night as well. The Hang Seng is about flat as we speak, but the Taiwanese index is trading with gains of over 1%. The Japanese markets are leading the gains, though the Nikkei is trading with gains of 1.5%. The South Korean markets continue to recover the losses that they made post the political crisis that emerged in the country. The Kospi is trading with gains of 0.7%. So it's good going on most fronts on the Asian markets. Pull up the GIFT Nifty as well. That'll give you an idea of how our own markets are likely to start off. Well, we have been range bound for all of last week, continuing into this one as well. The implied open suggesting yet another flat start, but above the flat line for our own markets. But yesterday's session in Wall Street was a mixed one because the Dow's underperformance continued. That index ended in the red. The S&P 500 ended with gains of 0.8%, but the day belonged to the tech-heavy Nasdaq, which ended at a record high, closed above 20,000. Most of the big tech contributing to the gains. So it was a great day for the Nasdaq. Now that came because the November CPI inflation report came in line with expectations, clearing the way for the Federal Reserve to cut interest rates next week. CNBC's Rick Santelli has the numbers.
Expected up 0.3% on the headline, comes in exactly as expected, up 0.3, which is 1/10 hotter, at least until revisions hit the wire, of last month's up 0.2. And by the way, we had 4 up 0.2 in a row. Up 0.3 brings us to the equaling of April when it was up 0.3. We have to go to February and March, both up 0.4% to find higher numbers. If you subtract food and energy, it remains at up 0.3%, equaling our last look, and it is now the 4th consecutive month up 0.3%. Just to put a face on it, to find a higher number, you go to March when it was up 0.4. The low read of the year, was up 1/10. That was mid-year in June. Year over year, up 2.7. 1/10 hotter than the rearview mirror, as expected. 2.7 is the warmest since July when it was 2.9. The high water mark is 3.5 from March of this year, at least the high water mark for 2024. And in my opinion, the most important number of all, year-over-year core, expected up 3.3%. It comes in up 3.3%, the third 3.3% in a row. High water mark for the year was January when it was 3.9. The lowest it's been this year is 3.2 several times. That was July and August of this year.
Well, no bad news is good news, as they say, and that's exactly what happened in the US yesterday. Now, on that note, let's listen to what former Fed officials have to make of the CPI numbers and what they think the Fed's next move could be.
I think there's going to be really interesting discussion at the upcoming FOMC meeting. These numbers are coming in as people expected, but they're not great numbers. And you see a stalling in this path down to 2%. It is true that from a point of view of the real interest rate, which is the interest rates adjusted for inflation, which is what really does affect the economy, there's some restrictive policy here. However, we're in a situation where there's other elements of the financial markets that are very buoyant, particularly the stock market. So there's really a situation here where the Fed may not really be restrictive enough given the numbers. So they sort of don't want to surprise people, so that it's likely they're going to cut at this meeting.
As you know, they're just about 99% now of a likely cut of a quarter. The economy's doing well. Powell keeps talking about this. Financial conditions are wonderful. Look at what happened here on the floor today. So financial conditions are very accommodative right now. A lot of private capital out there, private lending and so on. If I were at the table, I would say let's pause, but I'm not at the table.
That's all we have on the global market front, but we take a short break on this note. And up next, India's CPI inflation numbers for November will be released later today. We tell you what to expect after this short break. Stay tuned. Welcome back. Now, before we get to the all-important inflation print, let us tell you how will all of the overnight cues and how the markets are set up ahead of that. Our research team is joining in with how the trade setup looks like, the stocks that are likely to be in the news, and the setup on the F&O side of things as well. First up, Vivek joins in to get all the market cues you need to watch out for. Vivek, good morning. A very strong handover coming in from the Nasdaq, but what's the setup looking like here?
Good morning. That's right. Nasdaq, very strong handover about the 20,000 level for the first time. The inflation data has set the stage for another rate cut. Now, talking about US markets, the mixed cues, of course, given the fact that there was a strong handover from Nasdaq, Dow actually underperformed. When you're talking about oil prices yesterday on the back of some news developments, you actually saw a bit of a spike as far as the oil prices were concerned. Brent high by almost 1.8%, now hovering around the $73.5 a barrel mark. But let's come to the Indian markets. Indian markets yesterday largely flat, range-bound session. And when you're talking about the broader end of the markets, that is where the outperformance continued, and it continues quite significantly, especially in the month of December is concerned. On the back of that, you saw the market breadth in favor of the bulls, in favor of advances. Now, talking about what actually did well, you saw the IT pack, especially in the last hour of the session, doing quite well. But on the other hand, the banking pack, the Nifty Bank Index, the PSU Banking Pack, all of them yesterday underperformed. In fact, the PSU Banking Index saw quite a bit of profit booking emerge. Today, quite a lot of cues that we need to keep an eye out for. A couple of very large block deals, clean out trails in Nuvama as well as Newland Labs. So that'll be something that the market looks forward to. Asian markets, GIFT Nifty, all indicating largely flattish start for our own markets today.
Block deals, IPOs, there is plenty of action beyond the benchmark indices as well. Vivek, thanks a lot for that. Over to Vamakshi now. List out the stocks you need to watch out for. Vamakshi, good morning. What's on your list?
Well, good morning, Hormas. Let me first start off with Reliance Power. Reliance New Suntech has won 930 megawatt solar energy contract with battery energy storage system project from SECI. Acme Solar Holdings has bagged a 250 megawatt firm and dispatchable renewable energy, that is an FDRE project from NHPC at a tariff of 4.56 rupees per unit. And this project also includes a green shoe option to upsize the capacity from 250 megawatt to 500 megawatt. Bari Energies is the next one we'll be watching out for. They've received an LOA for the development of 170 megawatt solar power plant in Madhya Pradesh from Reva Ultra Mega Solar. Nuvama Wealth Management is the next counter we'll be watching out for. So sources suggest that Edel Finance, ECAP Equities are likely to sell nearly 7.1% stake in the company via block deals at a floor price of 6,800 rupees per share, valuing the deal at 1,734 crores. And this trade is likely to be a clean out trade. Samman Capital, the board has approved fundraising via a QIP up to 2,500 crores. Grasim is the next one we'll be watching out for because the board has approved fundraise of nearly 2,000 crores via NCD on private placement basis. Greaves Cotton has approved OFS for certain equity shares of its arms Greaves Electric held by the company in the proposed IPO. Gopal Snacks, a significant fire accident took place in its factory in Rajkot, Gujarat. Varroc Engineering, the Singapore tribunal has passed an order. The order has been passed in favor of Best Motors and against the company, and therefore the order has asked the company to transfer 50% stake in Varroc TYC Corp to Best Motors for nearly 310.5 yuan. Gland Pharma has received US FDA approval for phytonadione injectable emulsion. Vedanta, a board meeting is scheduled on December 16. They will be considering an an interim dividend out here. And lastly, keep an eye out on Indian Overseas Bank, and that is because they've received an order of refund of nearly 808 crores from the Income Tax Department for assessment year 2013-14.
Amakshi, thanks a lot for that. Keep an eye out on all of these names. And lastly, Mangalam joins in with cues from the F&O space. Mangalam, good morning. The weekly expiry today, it still remains in the range, but what's the setup looking like now?
Well, it is in the range. Like you pointed out, the frontline indices in a range, the action is beyond the broader markets. And if you look at the Nifty move yesterday as well, all of 31 points. But that's not the bigger story. The bigger story is that the Nifty's high and low yesterday had a difference of just 108 points. That's the lowest range that we've seen in at least the last 4 or 5 sessions. If you look at it, the range has been narrowing between that 150, 160 odd points over the last 3-4 trading sessions. Typically, this narrowing of range happens ahead of a big move on either side. So we'll keep an eye out on that. My sense is that big move could be on the upside. And the reason why I say that is after 3 days of making lower lows, yesterday the low on the Nifty was higher than the previous day's low, 24,583. This compares with 24,511. In the cash markets, the FIS sold yesterday about 1,000 odd crores, but that's an anomaly this month because this is the third instance of them selling this month as against the 7 instances that they bought itself. In index futures, no real problems. They've been selling a little bit after covering a lot of the shorts, so 43% long exposure is what we have. Weekly options expiry. The option writers are positioned for a market in the range. 24,650 is the option which is most active, which is both the call and the put. So those who are writing this straddle, which is one call and one put together, are playing for a premium of 120 rupees. They would be in the money only if the Nifty is between this 24,530 to 24,770 sort of range in today's trading session. And that's what, the option writers are positioned for this weekly options expiry. Just keep an eye out on Hindustan Copper. That stock has entered F&O ban in yesterday's session.
Interesting, Mangalam. Thanks a lot for that. Now, the all-important data point that is expected later this evening, which is the November CPI. The CNBC-TV18 poll sees that figure at 5.5%, below the MPC's mandate of 6%. But food prices still remain high. Lata is here with a breakdown of what you should be expecting. Lata, good morning.
Good morning. Yes, the poll does see that the November inflation will be 5.5%, which will be a relief. Because look at the October number. October number was 6.21, above the MPC mandate. And basically, that is the upper level of the mandate. The MPC's mandate is to keep inflation at 4%. Even at 5.5%, we are a distance away. And God forbid if it comes a little above that, because there are quite a few people who have readings between 5.5 and 5.8. But as you said, we have to worry about food inflation. Before I come to that, core inflation, that's expected to come in at around 3.7. Much like it was in October. That's not been a problem. Year ago also it was 4.1. So that's well within that 4% mark. But food is not behaving itself. It is still seen at 8.5%. And just look at the year ago number. The year ago number is 8.7, which means we are rising every year at 8 to 9% on food prices. Tell me which rural person or urban person's income is rising at this point, which means you're actually seeing lower real incomes as far as people are concerned, and as far as the bottom half of the country is concerned. So it is a matter of concern, and everybody will watch out for that. Tomatoes, onions, potatoes, what you call top, because that's, staple vegetables for people. The consolation is that normally during December, Jan, prices tend to fall of veggies. So this may be the last of the bad 5.5% number. We also get the October IIP number. Not very significant because it's like a slightly lagged data. That's expected to come in at 3.5%, largely because the base was very high at 11% last October, which was all those festive month preparations. But more important, of course, is CPI because interest rate policy is based on it.
Interesting, Lata. Thanks a lot for that. The all-important CPI data that may have a bearing on the markets tomorrow as well. The time for a short break. Up next, states have sent out a lukewarm response towards the proposed GST changes. We get you an exclusive on the other side. Stay tuned. Back with us here on Power Breakfast. Now, here's a CNBC-TV18 exclusive. The GST rate rationalization proposed by the group of ministers has received a lukewarm response from the states. Now, the GOM has also proposed to tweak GST on at least 148 items. Now, we learned from sources that some states are likely to argue for a pickup in consumption before tweaking the rates. Timsy has more details on this exclusive.
The GST Council is slated to meet on 21st of December in Jaisalmer to discuss some of the key issues, including rate rationalization. Ahead of that meeting, sources have told CNBC-TV18 that states are unlikely to agree with the proposal of the group of ministers on rate rationalization. States are likely to ask the GST Council to wait for a pickup in the consumption before going ahead with the rate change proposals. States are also likely to raise concerns over declining GST collections as a sign of slowing economy, and thus the Council should consider delaying the rate rationalization proposals. On the other hand, sources say that the Council could see agreement coming in from the states on the rate cut proposals for life and health insurance premia. But when it comes to changes spread across several other goods and services, there might not be any consensus. So CNBC-TV18 reported a few days ago on the details of the group of ministers' report on rate rationalization. The first report on rate rationalization under the chairmanship of Bihar Deputy CM Samrat Chaudhary is likely to propose a special rate of 35% for tobacco and aerated drinks and changes across 148 items. The other is the report on health and life insurance proposing tax reduction and exemptions on the premia. The Finance Ministry, on the other hand, has already clarified that any proposal will be vetted by the GST Council, which is the ultimate decision-making authority and not the government at the center or individually the states. Back to you.
Timsy, thanks a lot for that exclusive. We'll keep an eye out on these details. But with that, it's a wrap on this edition of Power Breakfast from me and the team that put this show together. Thank you so much for watching. Bazaar Morning Call sets you up for today's trade.